Do you know what's sparking the cryptocurrency bull run of 2023 to 2024? Well, let's dive right in. Bitcoin and the cryptocurrency market are like a wild stallion galloping ahead, thanks to a cocktail of factors such as economic uncertainty, institutional acceptance, limited supply, and increased demand. Picture this. In 2020, trillions of dollars were pumped into the economy. This massive influx of money, a result of quantitative easing, has diluted the might of the US dollar, causing people to look for alternative assets. Enter Bitcoin, stage right. As the US dollar weakens, the allure of Bitcoin strengthens. It's a bit like a seesaw, one goes down, the other goes up. And it's not just individuals who are jumping on the Bitcoin bandwagon. Institutions are also starting to adopt cryptocurrencies, providing an additional push to the bull run. And here's the clincher. Bitcoin has a limited supply. It's like a rare gem. The fewer there are, the more valuable it becomes. So, the more people holding on to Bitcoin, the higher its value is projected to rise due to the diminishing supply available on the open market. But hold your horses. This journey isn't all smooth sailing. There are peaks and valleys, highs and lows, and right now we're looking at a potential peak. Recent analysis suggests Bitcoin could surge to $46,000 in the run-up to the upcoming halving event. This projection is based on historical trends and market behavior, particularly leading up to past halving events. But remember, with great potential comes great risk. The cryptocurrency market can be as unpredictable as a bull in a china shop. So, always do your own research, consider your financial situation, and if necessary, consult with a financial advisor. The more people holding on to Bitcoin, the higher its value is projected to rise due to the diminishing supply available on the open market. So, are you ready to ride the crypto bull run? So, what's in store for Bitcoin's price ahead of the halving event? Now let's delve into the potential for Bitcoin to surge in the weeks ahead and the importance of this move in light of the upcoming halving event. The halving event, if you're not familiar, is a major milestone in the Bitcoin world. It's when the reward for mining new Bitcoins is cut in half, effectively slowing down the production of new Bitcoins. So, what does this mean for Bitcoin's price? Well, if we look back at historical trends and market behavior, particularly in the period leading up to past halving events, we can glean some insights. One pattern we've observed is that Bitcoin has a history of turning previous resistance levels into new support levels. That's right, where Bitcoin once struggled to climb, it now finds a firm footing. This pattern of transforming resistance into support is a bullish signal, indicating that buyers are willing to step in and purchase Bitcoin at these levels, thereby pushing the price higher. If historical patterns repeat themselves, Bitcoin might embark on a rally toward $46,000 as it approaches the halving event. Now, this rally would likely entail revisiting the black trendline resistance, as observed in previous cycles. But here's the interesting bit. This trendline represents a declining resistance level over time. So although it may correspond to $46,000 this time, it is likely to signify even higher prices in future cycles. So, while we're talking about a potential rally to $46,000 now, in the future, we could be talking about much higher levels. It's an exciting time to be in the crypto space, and the upcoming halving event is sure to bring more twists and turns. But remember, the world of Bitcoin is filled with volatility and unpredictability. So always stay informed, stay cautious, and make decisions based on careful analysis. If historical patterns repeat themselves, Bitcoin might embark on a rally toward $46,000 as it approaches the halving event. What is the halving event, and why does it matter? Well, in the world of Bitcoin, the halving event is a significant occurrence that happens roughly every 4 years. It's a bit like a celestial alignment in the crypto universe. This event is essentially when the reward for mining new blocks on the Bitcoin blockchain is reduced by half. Hence, the term halving. But why does this matter? The halving event is a built-in feature of Bitcoin's code, designed to control inflation and scarcity. As the reward for mining new blocks decreases, fewer new Bitcoins are introduced into circulation, making the existing ones more valuable. Now, let's discuss the market's typical reactions before and after a halving event. Historically, the price of Bitcoin has seen significant upward trends following each halving event. This is often attributed to the increased scarcity and perceived value of Bitcoin due to the reduced mining reward. However, it's also important to note that the market can be volatile in the period leading up to the halving. For instance, in the weeks before the halving, There can be speculative trading and price swings as investors anticipate the event. This can sometimes create a sell the news effect, where the price dips immediately after the halving as some investors cash out. But typically, in the months following the halving, we see a return to bullish sentiment and a steady upward trend. In the upcoming halving event, the reward for mining new blocks will drop from 6.25 to 3.125 bitcoins. This reduction in supply could put upward pressure on the price, especially if demand continues to grow. However, it's also crucial to remember that the cryptocurrency market is influenced by many factors and can be unpredictable. Finally, it's worth noting that the trend line of Bitcoin's price has represented a declining resistance level over time. This means that although the price might face resistance at certain points, these points tend to be lower with each cycle. This declining resistance level could signify even higher prices in future cycles. What should you bear in mind when investing in cryptocurrencies during a bull run? Investing in cryptocurrencies, especially during a bull run, can be an exhilarating ride. Yet it's crucial to remember that the world of digital currencies is just as volatile as it is potentially profitable. This volatility can mean significant risks, and it's essential to be aware of these before you dive headfirst into the crypto pool. One of the most significant risks with cryptocurrencies is their unpredictability. Prices can skyrocket one day and plummet the next. This unpredictability can result in substantial gains, but it can also lead to considerable losses. It's important to remember that the past performance of a cryptocurrency doesn't guarantee its future success. Another risk is the lack of regulation. While some view this as a benefit, it also means there's less protection for investors. Unlike traditional investments, if a cryptocurrency investment goes south, there's no safety net or recourse for investors. Moreover, while the blockchain technology underlying cryptocurrencies is secure, the exchanges and wallets where these currencies are stored can be vulnerable to hacks. It's crucial to use reputable platforms and take necessary security precautions to protect your investments. Given these risks, it's essential to conduct thorough research before investing in cryptocurrencies. Understand the technology behind the coin, the problem it's trying to solve, and the team behind it. Also, consider your financial situation. Only invest what you can afford to lose and avoid putting all your eggs in one basket. Diversification is key in reducing risk. Lastly, if you're unsure or new to this, consider consulting with a financial advisor. They can provide guidance tailored to your financial goals and risk tolerance. So, while the potential rewards of investing in cryptocurrencies during a bull run can be high, the risks are equally significant. But with careful research, prudent planning, and a good understanding of your financial situation, you can navigate the choppy waters of cryptocurrency investments. Remember, cryptocurrency investments come with risks. Always do your own research and consider your financial situation. So, are you ready to ride the 2023 to 2024 cryptocurrency bull run? Let's quickly recap what we've discussed in this video. We delved into the factors driving this anticipated crypto stampede, pinpointing economic uncertainty, institutional acceptance, limited supply, and increased demand as key elements. We also highlighted the potential impact of the trillions of dollars injected into the economy back in 2020, which has weakened the US dollar and fueled the demand for alternative assets like Bitcoin. We then turned our attention towards the future, particularly the anticipated Bitcoin halving event. We discussed how Bitcoin could potentially surge to $46,000 as it approaches this milestone, following historical trends and market behaviors. However, we also emphasized that this projection is not a guarantee, and the actual outcome could be influenced by a multitude of unpredictable factors. Remember, the cryptocurrency market is known for its volatility, so it's crucial to do your own research and consider your financial situation before investing. If necessary, don't hesitate to consult with a financial advisor. Now, if you found this video helpful and want to stay updated on the latest in the cryptocurrency world, we have a small favor to ask. Give this video a thumbs up and help us reach our goal of 100 likes. Your support is what keeps us going and allows us to continue providing you with quality content. And if you haven't done so yet, make sure to hit that subscribe button. Here at Beast Finance, we're dedicated to keeping you informed about the ever-evolving world of cryptocurrency, and we don't want you to miss a beat. Until next time, I'm Emily from Beast Finance signing off. Stay tuned for the latest news and analysis in the world of cryptocurrency.